The next piece is, why am I raising money from other people? Like, so you guys know, or so you know, I've for 20 years, I've not raised money from like I haven't went to the general public. It's been my friends, business partners, business associates, people that I knew. I didn't go to social media and all the different places to go and raise money. I've done it myself and I've invested in using my own money. So one of the reasons why I'm going now to doing the things that we're doing with the real estate fund and doing this stuff is two reasons, actually. Number one is I can scale my business faster. I can go on buying real estate deals, small multifamily properties, 10, 20, 30, 40 unit buildings, and then keeping those properties and then reselling them myself with a few other partners. But if I actually went to my friends on Facebook and Instagram and people that I meet in the business world and stuff, people who know me already, like me and trust me, it's a lot easier. And then we can get involved in these deals, right? So number one reason I can scale my business faster. And number two reason, I think you'll appreciate this. And we're not talking about mom and pops. We're talking about these big apartment buildings that we're looking at. And I'll be able to show you what those are. But the typical real estate deal, all real estate deals, all of them, at this level, there's two pieces to them. There's bank, because they give the debt. And then the other piece is partners. Right? And that's where the equity comes from. So that there's already like, you're going to have to raise the money for these deals anyways. So it doesn't matter where you get it from. You're either going to go to a bank, and typically the bank money is always going to be the best money. They're going to be your main partners. They're going to give anywhere from 60 to 75% of the money that you need to buy these big deals that we're looking at, these really nice properties. And I'll show you a picture of them in a second. And that's going to cost anywhere from, at least for today, 5.25% up to about 8%, which typically this is usually about 4%. That's typically what it is. And they're giving you 60 to 75% of the money for these deals anyway. So when you buy one of these properties, you're going to get bank finance. You got to raise the money. It's coming from other people anyway. Now, these are partners. They're usually going to give anywhere from 20 to 25% of the equity, right? That's your Goldman Sachs. That's your Blackstone. That's your KKR. That's all the big institutional money, the wealth funds, sovereign society funds, things like that. Like that is going to happen no matter what. So some of the deals that we're looking at, these people, the institutions, they're like, one of the deals we looked at was a BlackRock deal they just sold. The other one was a Blackstone property that we looked at. There was another one that was an equity residential, which is Sam Zell. So I'm actually going after these big deals that these people are already either owning or they want to invest in. But instead of going after them, because this is a wealthy group, that everybody on this side that's the wealthy money. That's more money they've got. But what I wanted to do was I wanted to help the regular, everyday, average investor, guys like myself, guys like you, to say, hey, what if we went after the same real estate these guys want to be in anyways, and we put our money together to buy these deals and we got big? Because realistically, I could go to them because the bank's going to give me the money for these deals no matter what. I can go to them and say, hey, I got this deal. I'm going to put in the other 10 to 5%, 10%. And they would do the stuff that I'm looking at all day. They really would. But they're going to say, hey, Vic, we want you to do this. And they're going to put in controls against me for what I can or can't do as an owner. So I don't want that. So I was like, hey, why don't I just do this? I'll just go to my friends and I'll tell them what I'm going to do. And then we can partner in these deals. They can invest their money that they have sitting in the bank's dying savings. They want to be in these deals because normally we wouldn't get these type of deals. These deals are typically reserved for wealthy institutions. But that's why I'm doing that, because I was like, hey, if I can be a person that creates a vehicle to be able to go off and help the regular investor, they're not calling Victor every time there's a huge deal. They're not calling Brent. They're not calling my mom, my dad. They're not calling all the people that I know, my buddies, Kahea, Charles, all these people. They're keeping that to themselves. So I was like, why don't I become a competitor? Why don't I put together my business and I go after these deals? So that's why I did that, because I wanted to be a person that could actually go off and help the regular person get into these great institutional quality assets. All right. So, and I'll have this written out. But so in here, I'm going to do, well, here's what I want to show you. I want to show you something. See if I can pull it up the right way. Let me show you some of the deals. Like, so this property, this is an aerial property. Again, This is one of the deals that we just made an offer on. So this property traded, I put an offer in on this deal for, I want to say I made an offer for 37 million. Is that right? Yeah, 37 million on this deal. So we're waiting to hear back on this deal. This deal is beautiful. Like for me, when I'm looking at something, I'm like, look, I'm looking at location, I'm looking at great pieces of property. What do we want to have our money into with the fund? This property will be in the fund. This will be a hold, long-term hold property for us because I know this deal is never going to lose money and it will make us money. The other property we have an offer on right now, where is it at? Seacliff, there we go. This is another deal we have an offer on right now. So I want you to see the type of assets that we're going after. This is 112 units. This property is this whole piece all around here. I love this property, man. This is a beautiful property. I love it. Love it. I want this property. They're going to sell. They're going to have to sell at some point. They're going to come to it, but we put the offer in. So these are the type of deals. When I say these are institutional quality assets, these are properties that big institutional investors that are coming in, they have money like the BlackRock, Blackstone, JP Morgan Chase, Goldman's. These are properties that they're investing in that the little guy typically doesn't get, guys like me and you, but that's what we're going after with Bell Capital. Those are the deals that I'm competing for in this market. So for example, let me show you how this works. So we'll look at a $30 million deal, right? 30 million. Typically, I'm going to put down 40%. So we're looking at, what is that? 12 million, sorry. $12 million as the equity. This is the purchase price, right? The loan on this deal would be 28 million, right? That's the debt, which I can get the debt, no problem. I already have a debt guy. We've already sized all the loans that I'm putting on. I underwrite thinking that we're going to need to come up with 40% down, which that's in the ballpark. So that's there. And then I'm expecting on all of our deals a 15% internal rate of return. You see that? Good. And I know you're there. And when we sell the deal or refinance, when we sell the deal later down the line, we underwrite for 7 to 10 years, right? We're looking to resell that deal called a 2X. I'm expecting that we stay in this deal. We make 15% return on our money over 10 years. And when we sell, we exit we double up on that deal. So we make double our money that we had in the deal, double the 12 million or more. And we're also making a 15% internal rate of return while we held that thing. That is a crazy opportunity for those type of deals. We're not talking about a quick flip owned by a mom and pop. We're talking about deals that we can go put our money together and buy these bigger deals. And that's how that works. And I'll show you how this walks down. So this is what my target is on all of my deals. And I've done more. This is our target. And that's on a 7 to 10 year old. 7 to 10 year hold on all the assets that we take a look at. And this is important because you make money by buying the best locations with the greatest property that you can, and you hold them, right? Because you hold them for value. That's exactly what it is that we do on that. So the way that works, let's say, and I'm going through now, is like, hey, how do the returns work? I know you might be asking, like, Vic, how the returns work? Let's say that I put in 100,000. All right. So let's say you were to invest 100,000 into that deal, and that deal is sick. That location is sick. Both of those properties, best location ever. Like Warren Buffett says, don't lose money. Well, in real estate, you don't lose money because you buy the right area. You buy the right location. It's near Whole Foods. It's near hospitals. It's near Starbucks. It's near new developments. All the homes around these things sell for anywhere between 800 to $1 million too. So everybody that wants to buy in both of those locations, matter of fact, that one property, the first property I showed you, that property is built near a multi-million dollar shopping center called Fashion Mall. It is the number one area, the number one shopping center in San Diego. It's in that Mission Valley, Mission Beach area. It's sick. It's sick. It's irreplaceable. You couldn't replace that location if you tried. So, but let's say you were to invest 100 grand, right? My target for every 100,000, you make about $500 a month. All right. So times 10 years. Then at the end of that, within that time frame or before, I'm going to refinance and give you your 100K back, right? So there's your 15%, right? Return on your money. That's an internal rate of return over the 10-year period. And then when we sell the property later down the line, we're going to sell, and your 100 grand is going to be worth 200K, right? So that's 200. That's a 200% return on your money, right? Because you got your 100K plus another 100K back. So that is how we come up with our with what we're doing. But let me share something with you. Let's do this. Let's say I do it in 7 years, because my track record has been anywhere between 7 to 10 years. So let's say you got 5% times 7 years. That's 35% on your money, right? So that's 35%. Plus, when we sell, you're going to get a 200% return, because you're going to get your money back plus another 100K, right? So that's a 235% return on your money divided by 7 years. If we were to do it in 7 years only, right? That's a what, 33% internal rate of return. So even though I like to express to people, it's in our documentation, hey, our target return is 15% return on your money. I know this is more likely to happen, because everything that I look at, my target return on all of our deals is at least 5%. So if you invest 100 grand, you can expect roughly about 5% return on your money. That's about $5,000 a year. And then when I turn around and refinance the property, my goal is to refinance all and give you your money back, but keep you in the deal. See what happens with most syndicators and fund managers, even the big guys, even all these Blackstones and all the other bigger institutions, what they'll do is they'll get their investors' money from pension funds, state funds, things like that, retirement funds, CalPERS, everything. They'll get that money from an investor. They'll use that money. They'll get the debt, and they'll get the down payment from their investors. And then at the end of, let's say, 5 years, they'll refinance all their investors' money off, give them their returns, and kick them out of the deal. And then they will keep that deal because they've already paid their investors back. And then they keep the deal. But what I'm doing, and which is what I've done, even in my other multifamily deals, I've refinanced my investors' money back. I've paid them back. And then we stayed in that deal for another 5-6 years. And then when we sold, I'll give you an example. One of our deals, when we sold for $700,000 over what we bought the property for, but we had no money in the deal. And me and my partners, we split that in half, right? So he got, and just on this one deal, for example, he got his $250 back. We refinanced that within 3 years. And then we stayed in the deal for another 5-6 years. And then when we sold, he got another $350,000 cash. That, and he got cash flow the whole time we waited. So he got cash flow based on the amount of the percentage that he was in the deal with me, but he didn't have any money on the deal. So technically, that was an infinite return for him and an infinite return for me, because we didn't have any money in the deal and I was the operator. So sorry about that. We had somebody trying to get on. But when you take a look at the power of multifamily real estate, you can't do that in a single family house. You can refinance, take your money out, but you still got to keep it. You got one tenant. Like the stuff that I'm looking at, that one property is 70 units. The other one is 112. We had an offer out on a 203 unit that we're waiting to hear back from as well. I didn't pull that one up, but that deal is there too. Well, while I'm talking about it, I'll even show it. Let me see if I have a picture of that one. Yep, here's that one. This is another deal that we put an offer on. I wanted to show you. These deals are great deals, guys. These deals are owned by some major players, and I'm going after them, man. I'm putting this together because I feel like we should be owning stuff like this. It's the regular guy. So the people that own this property, that bought this property, they pulled it off. They're waiting to go back and sell. We put an offer in, and they're like, hey, we're going to hold off for a little bit of time. It's an institutional group. So they're an apartment building group that has a company, but they get their money from state retirement accounts, firemen's insurance like Guardian Life and life insurance company, New York Life. They are their investor partners. It's not like people like you and I. So When I say I'm going after some really great deals that we would normally not be able to get because they're institutional type assets, or institutions are the investors, they're the partners in these deals. The other groups are not going to guys like me and you. They're not going to the small business owner and saying, hey guys, we're coming up on a deal. Do you guys want to invest? They don't give us access to these type of deals. But I want to show you. So this is this property. This is a piece of this property, but it also goes up all around here. Right over here, pushing all the way down in this area is a hospital. It's a major hospital. And over here is all San Diego State University. Like this right here is San Diego State University. This property is prime location. This thing is irreplaceable. The location by itself, you can never do this again, right? Ever. And this thing ain't going anywhere. This thing is 203 units, rock solid. It's 97% occupied. Has been for a really long time. So there's not a lot. It's already stable. This thing's cash flowing the day we buy it, right? And we made an offer on this deal at 57 million. They came to market at 72 because the interest rate on the debt dropped. That's the only reason why. Because this deal actually is worth more than 72. I think it'd probably be worth 76 million in a regular debt market. So this is the time why I'm pushing so hard. Why I say why now? Because there's never going to be another opportunity to do what we're doing today after maybe 24 months times past. This will be it. That window will shut, close, boom. But we will continue to play this game. So I wanted to share that with you because I thought it was important for you guys to really see what we're talking about and how this works, right? So, you may or may not have questions. I know I went through this fast. Typically, people ask a good bit of questions here. Vic, how's it work? How quickly do we have to get our money in? Do we have something? We're working on deals right now. So if you're interested, you have questions, reach out to me, let me know. But I wanted to share this with you because I think this is important for you to get. All right. So, in all things, people are like, hey, you know what? What's in it for you? What's in it for me? All right. So this is you. This is what, and this is me here. Right. So what's in it for you? What do you get from Victor? If we're looking at it from that perspective, I'm finding the deals, right? I'm financing the deals. I'm negotiating the deals, right? I'm managing the manager. I'm not managing these deals, guys. We have bigger companies that are going to come in, professional management companies like not Blackstone, but Greystar. That's one of the people that we're going to be working with, one of the main companies that I like here. So they're going to be our property management company, right? So that's we're managing the property, and I'm using my resources, all of the relationships that I got to build with brokers, debt fund guys, lenders, property management offices, attorneys, SEC attorneys to make sure our documentation is good, the investor portals and all the other stuff that we have to do, the management, fund management, as well as distribution, the tax benefits, because you guys do get the pass-through tax benefits because you're partners, and you get the depreciation because you get to write off. That's huge. We'll talk about that at a different time. But all of these things that you get, plus, I get to send you guys a monthly cash flow check for the investment. Now, here's what I get from you guys. My goal is to scale all the way up to, my first goal is to get to 4,000 units. Well, my first goal, naturally, I got targets to hit, right? We got to get to 400 units, then 4,000. But this is the first goal. Then I'm going to scale to about 10,000 units. I can't do that by myself, guys. I got to have partners. I got to have investment partners. I got to have financial partners. I got to have SEC, all my attorneys. We got to keep raising fund after fund after fund. This is going to take time. And here's why I want to do that. So my goal is to get to, we'll start with my first goal so you guys can see. You guys know I've been talking about it for a while. I want to eventually become a billionaire in my lifetime. This 4,000 units, and I budgeted this out, so let's look at that. At about 300,000 a door, puts me at $1.2 billion worth of real estate, us together. I'm going to become a billionaire, and I want to make you guys multimillionaires doing this with me. This is the fastest way for us to do that. Look, I'm not a singer. I used to be an MMA fighter. I used to be an athlete. I'm not going to sing my way into being a billionaire. I'm not going to fight or dance or be some football quarterback or something and get multi-million-dollar contracts and eventually parlay that. Real estate is the easiest way for me to do that. That's why I picked this. But this would be $1.2 billion worth of real estate that we can own. 4,000 units, man. That's not a lot. Think about it. Just the 200 units, the 100 units, that's 100, plus the 112 units, plus the other 70 units gets me closer to my first target, which is 400 units. And then we accelerate. 400 units puts us at over $100 million worth of real estate, right? At that 300,000 a door range, right? That's how I did that. But when you think about it from that perspective, let's just take the 4,000 units there. Here's what I'm looking for. If I can just raise rents $600 over 10 years across 4,000 units, that's $2.4 million a month in revenue times 12. That's $28 million in revenue that we can carve up. That's extra. That's not what it's worth when we buy it. That's just me saying, hey, I'm going to be in this deal for a while, so I'm going to raise rents up to $600 over 10 years. Do you guys think that every year I can raise rents at nice properties, nice locations about $100? Hey, guys, it's going to be $100 more a month, right? No one's going to bitch about that, especially not in the markets that we're in, all right? So, but if you take a look at from that 28 million in value, that income that we created divided by 0.05, which is a cap rate. That's how multifamily properties on their income are rated. That's $576 million more in value that we created just in 4,000 units. Man, just a $600 rent bump, right? Literally over, I say 10 years, but I know we can do it less than that. I know we can get a deal and start raising rent slowly but surely, because we're going to take care of the property, take care of the tenants and residents, make sure they're happy, stand up when they come and give them a better experience, and actually start to treat people good in these properties, because they're not beat up properties. They're really nice. I know that works. Now, just for this, let's play around with that. Let's say we were able to get to 10,000 units. Let's say we raise the rents over $600 over 10,000 units. And this is going to take some time. That's $6 million in increased income a month times 12. That's $72 million a year in increased value. And if we use that same cap rate now, see, I had to turn my phone sideways. Now we're looking at, what is that? That is, hold on, drum roll, please. That's $1.4 billion in increased value of our portfolio if we were at 10,000 units. Like this, I mean, naturally, we would share that. Like if we were ever exit this portfolio, we would bring that to market and sell it, or I'd refinance that. Now, we wouldn't get all of it. I would get a piece of that. We would share all that stuff, right? Depending on how much you invested, you guys would be a part of that. But you can get why I get so excited about I want to get here, and I want to bring a bunch of people with me. Guys, I can't do that by myself. And it's going to happen in my lifetime. I'm going to do it. It doesn't take much. The minimum is 100,000. The average person invests 300,000 with me, and they keep doing it over and over again. That is how we're going to all win here. I want to help the everyday regular person get invested in multifamily real estate and create massive wealth for you forever. That's my goal with this. So, yeah, I mean, that's what I get from you guys. You help me scale my business faster. You help me hit one of my lifelong goals of become a billionaire. And I get to help people become multi-millionaires doing it with me. And I get to actually live my purpose. This is what I believe I'm built to do. So I just wanted to kind of share that with you, because there's always that question like, yeah, man, what's in it for you in this thing? Hey, man, I get to achieve my goal. I go to 4,000 units and then 10,000 units. And later I'm going to go to 20,000 units. And before you know it, we are going to become the #1 crowdfunding real estate company in the United States. We're going to be one of the top multifamily owners, the top 50 minimum in the nation. That's my goal for Bell Capital. And I can't do that without you guys. I want you to be a part of it as my investors, my partners. You guys get massive benefits. It's not like investing in a REIT where you invest money in a REIT, but you don't own the real estate. You just own shares of the company that owns the real estate. That's all you get. But with me, you're an actual partner in the deal. You're a limited partner. You invest money. You don't get to make a bunch of decisions, but you do get the benefits of my decisions, because like I said, I've been doing this for so long. I'm already successful at it. I already have the experience. I have the track record. I have the financial capabilities and facilities to get this thing done. And we already set up the fund. We already paid the money. We've already done everything. All anyone has to do is invest the money, be patient, And when we close the deal, they'll start getting a check every month. All right. So I hope that explains everything. If you guys have any questions, or if you have any questions, let me know. As we get anything going on, let me know. If you're interested in becoming a part of this, all you have to do is reach out to me. Like I said, if you have any questions, biggest thing is figuring out how much money you want to invest and go from there. But I'm willing to answer any questions you have. Let me know how that goes. This is how investing with us works. What I'm seeing out there right now is that all the owners, the big groups, cannot just turn around and sell, right? They have to go to a committee and say, hey, we have these properties. The interest rates have changed on us. We have to come to market and get rid of them because we're out of time on our fund and we have to pay our investors back. That's the game. You know, when you invest in a fund, that's what's there. That's happening. I'm looking to keep raising money and I'm looking to steal stuff. This is the only time in probably the next decade, maybe two, that we will get the opportunity to get these type of assets from these type of owners and groups, because they would never have to sell. They would never come to market and sell at the price points or do what they're doing right now. They just won't do it. And that window is going to shut, I would say, probably another 18 to 24 months. The opportunity to do what we're doing right now is going to go away, and we will be back fighting for deals. Right now, nobody's selling. So this is the opportunity, guys. This is the opportunity I see. This is what I'm going after. I have I think we have an offer of $47 million on a deal, a $40 million deal, a $40 million offer out, a $30 million offer, $37 million offer out. So we are actively going after deals, and we're building relationships with these apartment building groups saying, hey, if you guys are interested in selling or coming to market, let us know. We can use your broker. We can use, we're out there every day building these relationships with the people who, dude, some of the people that I'm talking to that I have relationships with are people that I have read books and studied their companies. Like, they're my idols. I'm modeling my company after Sam Zell Equity Residential and trying to buy property from them at the same time. Sam just passed away. I'm modeling my company after BlackRock and Blackstone. Steve Schwarzman over at Blackstone. Larry Fink over at BlackRock. These are the giants. They own trillions of dollars of assets. And we've built relationships with their acquisition and disposition department and getting insight on some of these properties, as well as the brokers. Hell, it took me 2 years to get one broker to just call me back. And now he sends me deals and we talk all the time. So that's what's coming to the table when you invest with somebody like me. And I can tell you guys, those numbers that you see me do, like, we have a fund right now. That fund's a $50 million fund. I will fill that fund. It will be full, and I'm going to move on to the next fund, and we will get great opportunities and great deals. And you're going to wish I had pushed you harder to go off and get money and do the things that you needed to do in your business so you can invest with me. So, how am I looking on time? Oh, I'm right on time. This is not a lot of no questions, but I wanted to make sure to kind of talk to you guys about, again, what's going on now? What's the opportunity? The market's shifted. The interest rates have went up, right? So that means cap rates come down a little bit, and we get to play that game. Whoever's going to come to market that has to sell. We're looking for owners that have external pressure that force them to compromise a little bit on their price. They got to come down on price to be able to get this done because of outside pressures, not because the property has a problem, but the seller has to sell based on some pressure that he cannot make go away. Because we're not talking about a mom and pop that you can say, whoop, I'll pay you guys later. We're talking about a pension fund or a university endowment that says, hey, we lent you guys $50 million. Time is up. We need that money back. They have to exit. They have to do that. It is not like something else. Never in our history will this opportunity come again where this is going on in the financial segment of the world. So, but I'm playing the game. I got it. That's why I started doing this, and I want to invite you to play this game with me. So if you're interested later, now, if you have questions, any questions, even if you're like, hey, I just got questions. What are your fees? How long does it take? What do I need? What do you need? What do you want to see? Things like that. You want to take a look at some of these deals with me? Hey, I'm open to doing all that stuff. We can do that. So if you have questions, let me know. I know you're busy. I know you're on, but I just wanted to make sure to connect with you on this and go over this little introduction. Like, hey, this is how it works investing with us. These are the returns. This is the whole period. And this is the types of deal that we're going after. And these are the offers that we're putting out. And there's more deals that we're going after very similar to that. But that's the general look and feel of the locations, and surrounded by hospitals, surrounded by jobs, surrounded by great properties around it, great amenities around it. And the property has to be big enough and nice enough for institutions to later want to come and buy those properties from us, because that's who we're going to sell to later. All right. So I hope that this helped you, answered any questions that you may have in your head. And I appreciate you taking the time for getting on. So anything you need, let me know.